Hey guys, welcome back to another episode of price action trading on Bank Nifty. We will see how, as day traders, we could have taken some trades on Bank Nifty using just pure play price action. You can see in my setup, I just use one indicator, which is the 20 period moving average. We can even not use that, but it just helps to keep it on the screen. Now, we'll see what we could have done today and what were the trades that we could have taken based purely on price action. If we just scroll back a little bit or zoom out, we can see that Bank Nifty was moving up unless nicely, and since the 10th of April, we started to have a downward motion. Now, even though this fall looks huge, it would have been very difficult for price action traders to trade it. The only trade would have been this rise and then this fall. But if you look at yesterday, there was a gap down opening, mostly a sideways movement, and then in the last few minutes, maybe half an hour, 45 minutes, or 1 hour, there was a downward movement. Again, for today, we can see that it again opened gap down, no chance for us to take any trade, and then all through the day, it was a sideways movement. Today, I will also share with you how we can decide whether a day is going to be a trading day, that means the market is just going to stay in a sideways range, or it's going to be a trending day. So just try to stick till the end. It will help you take those decisions. Now, today the market opened gap down, mostly because of the international tensions. All the US markets as well as the Asian markets were in red, so we also opened gap down. And there was nothing which we could have done. We could have just waited to see how the price action unfolds, and then it makes sense to take some trade. Obviously, we have a downward moving average, as well as we can see from the last 3 days the price is moving down, so we are in a bearish trend, confirmed bearish trend on this time frame, 5 minutes time frame. That is what we trade. So we will see whether there are some trades which we can take. The market opened here, went down and closed here, but it formed a tail till this point. So there was some recovery and some buying by the bears. The next bar, it came a little down and then it closed bullishly, almost more than 3/4 of the body of this bar. Now, if you look at it closely, this is just a bear flag. Starting from here, going all the way down, then coming up, this is the flag. It will go a little bit higher, and then there will be the next leg down. That is what the trade we should be looking at as price action traders. On the third bar, the market went a little up. It started to go down. So we could have taken a trade, but then this bearish flag failed, which means that there was some buying coming at this level. So we should be very cautious and see how the price action will unfold. The fourth bar again, it opened very close to where this buy had closed, and it started to go down. Maybe this was the first leg down, up, and then the second leg down. Again, this one failed. Whenever there are two failures, that means the market will now do the opposite. It will not go down, it will most likely go up. I don't say this is what the best price action trader and teacher in the world, Al Brooks. I'll also give a link to his book in the description. So at this point, I was very sure that the market had lesser room to go down, and maybe it would either go sideways or up, because we were really in a very strong bearish trend. On the fifth bar, it was a doji bar, but it closed above. And then the sixth and the seventh bar, there was a sort of a micro bullish trend. Higher highs and even the close, higher highs and higher lows, and even the close was higher. This is the small channel we can draw. So this is a higher high, this is a higher high, even the closes are higher. So that means there is some bullish momentum building up. We could have aggressive price action traders could have taken a trade, a scalp trade, mind you, because we are in a downtrend. So we are not going to take the trade with full position. We are just going to, if we trade 10 lots, maybe we will just trade 1 or 2 lots for a scalp trade, and our target will be Our entry will be at the close of this bar, and our target will be till the time we touch the moving average. But we will look at each and every bar as how the price action unfolds. This bar is where we were very sure that we were in a winning trade. The next two bars is nothing but the bullish flag, the price coming down, and then we can expect the second leg up to easily reach our target of the moving average. This bar gave us a lot of confidence that yes, we will reach our target. With the next bar itself, the price reversed. From here it opened, it went all the way up to here, but then it could not touch the moving average and it started going down and it closed in the negative. And this was a bearish bar. So at this point, we should have exited our trade. If not here, then definitely here, because now our trade idea would have been scratched. We were already lower in the two consecutive bars in a downtrend. So our scalping up bullish trade should have been exited here. So as price action traders, there was one scalp trade from the open of this bar to the close of this bar, maybe around, let's say, 100 points or something lesser. Let's see, yeah, around 80-85 points, but that's good for a scalp trader. We would have easily got 30 points on the options. Then the second trend of the day would have been at this bar. You would ask me why. Now if you look at the price action, it went up till this bar, formed this doji bar, giving us the high of the day till this point, came down. We knew that the bullish momentum has finished, but then there will be again some force by the bulls to breach this high. So that is the point where we'll be very careful to analyze if this high is breached to the upside or if there is a failure at this high resulting in a double top. So we will draw a line at this point and see if the market breaches this high. The market slowly meandered, moved its way up. It went up, down, up. This is first leg up, bullish flag, second leg up, bullish flag, and the third leg up. Whenever there is three legs in a kind of a wedge pattern, then the market tends to move down. Number one. Number two, if we draw a bullish trend line, we can see that we are very close to the trend line near the moving average in a downward trend. So there is a high chance for this to fail. And at this point, when it breached the high, it became a doji. The next bar was a bearish bar. So at this point, we would have been very sure that this movement had very less chance of going up, and there might be just a correction till this low, or if we are lucky, till this low. But still, we will just trade price action. I will tell you in the end how do we know that this is a sideways action rather than a bullish action. Though I wanted to enter a trade here, but the markets move so fast that I entered the trade at the close of this bar. Now, how the price action unfolded? We went all the way down here. We have a bearish flag, and then there should have been a continuation for another leg down. Instead, it went up and then came down and closed here. Then it went down again, went up and closed here, and then finally it opened here. This was supposed to be our second leg down. First leg down from here to here, up, and then second leg down. But this closed in a doji, and here I thought maybe this downward movement had failed and we would just see a breach of this moving average, and I will exit my trade. Luckily, I did not exit my trade because I was waiting for this high to be breached as my stop loss, or the touching of the moving average, whichever happened first. The next bar gave me some hope that this reversal had failed, which means there will be a second leg down. So one leg down, there is a failure, and then there will be a second leg down. So I exited part of my position here, and then I kept one lot open, hoping that there will be more action. At this point, I should have exited my trade, but I was thinking that since this is a downward movement, we might continue a lot down. So I did not exit here. Foolishly, I did not even exit here. I just kept in the trade for my one lot. And at this point, I thought that maybe the markets are going down and then it might just shoot up. So I exited my last lot here at break even. And I made some money in this, not from here, but from here to here, I made some money. And for one lot, I was break even. After this point, the market was mostly sideways, but with a downward bias, you can see. And what would have been the third trade of the day? As price action traders, we would still be bearish. We would look at this movement up, down, there is a bullish flag forming, then maybe the second leg up from here to here. At this point, this would have been the second leg of the bullish movement, up, down, and up. So this bar reversed the bullish bar. From here we could have taken a short trade. Again, I was expecting the market to go down a lot, but it just finished two legs, one leg up and second leg. So this is what the two trades could have been. The third trade for very aggressive price action traders could have been these up movement, but mostly this second last bar of the day was covering by the uh, short covering by most of the traders. So it was very difficult to trade, because after this bar down, this down movement reversed. We have a upward bar, it closed here, that means there is a bullish flag. Again the next bar opened here, went up till here, again it went up to there, came down, that means again there is a bullish flag on a shorter time frame, and then it shot up. But all through the day you can see, if you zoom out, you can see there's just a sideways movement very close to the moving average. So the two trades of the day could have been at the close of this bar till the touch of the moving average, or exit close to here. And second, again on the downside, after this bar we could have taken a down trade till this low which we met here, or the low of the day. Now comes the second part, how to identify if we have a trending day or a trading day. Now the markets open at 9:15 and close at 3:30, so we have roughly 6 hours in the trading day, which is 6 hours and 15 minutes. So ideally we divide the day into three parts of 2 hours each, opening at 9:15 to 11:15. Then the second half of the day, the middle half of the day, which is the slowest, from 11:15 to 1:15. And then we have the last part of the day. So most of the action happens in the first half and the last half usually. And how do we know whether it's going to be a trading day or the trending day? So let's say at 1:15, if the price action, we will look at two things. If the price action at around 1:15 is near the moving average and near the range of the day till that time. The range of the day till that time was this. So this was the whole range of the day. Around 250 points. And at this point, though we were somewhere near the high of the range, at this point we were near the upper half of the range, but we had not crossed it a lot, and we were very close to the moving average. So these are the 2 points. First, it should be very high from the opening 2 hours of the range, and the second, it should not be close to the moving average. I'll remove this line. So if both of the things are present, it is near the range of within the range of the day of the first half and near the moving average, that means there is a high possibility for the rest of the day to be a trading day, which means a range bound day and not a trending day. So what do you do in a trading day or a range bound day? You only look at scalps. You don't take your full position, you trade smaller quantity. Keep your risk reward at best at 1:1 or very aggressively 2:1, and just do scalp trades. But if the market had moved here in the second half, or by this time the market have moved somewhere like this, that means we are in a trending day. So we could look at some correction and then again a movement up mostly. So that is how you see. If you divide the market into three parts, look at where you are at around 11:15, where you are in the range of the day, and whether you are closer to the moving average. So that's all from me, guys, and wish you all a happy Ram Navami, and see you guys again on Thursday. If you have any question and comments, I'll be happy to answer them. Please post your comments down below. Thanks. See you again. Bye.